For the next session, we will have the panel discussions about wars and real estate markets. We will have 3 speakers and 1 moderator. Please welcome Mr. Mykhailo, Pecherskyi, owner of Kalinka, Thailand. Professor Ranjith Perera, Asian Institute of Technology. Mr. Edmund, Managing Director of AES Technologies Private Limited. And our moderator, Mr.Vit, Kultanavipas, Board Member of FIABCI-Thai. Please welcome our speakers and moderator on the stage.
Thank you. Let me introduce, and my name is Vit Kultanavipas. I'll be the moderator of the. What we want to discuss today is about war, which is the war and real estate market, which affect into the entire world. So I would like to introduce a speaker today with Professor Ranjith from AIT. Can you give a brief about your?
Well, I was at AIT Pathum Thani for some time, now retired and back in my home country, Sri Lanka.
Thank you. And Mr. Mike, I'm not sure.
Mike would be there.
Mike will be there. Okay. And please introduce yourself.
I'm from Ukraine, but I'm based in Thailand for like 3.5 years. I own a real estate company, Phuket Property Association, and one development project in Phuket as well.
Okay, very nice. And thank you. And Mr. Edmund?
Hi, my name is Edmund. I'm from Singapore. I currently work for a PropTech company. Previously was a KO, or Key Executive Officer of the real estate local agency.
Thank you. What we want to discuss today, we will start with we have a question that how is a global conflict will affect the real estate market, especially in Southeast Asia and all around the world. So let me start with from Mr. Mykhailo. And then I think we can share the information.
You can call me Mike. That would be easier.
Okay, great.
So guys, great. I'm initially from Ukraine and I moved here because of the war. And what I'm observing that Southeast Asian market will expand a lot because currently all big investors shifting money to Singapore from Middle East, shifting money to Singapore and Hong Kong, and we're already observing that. For sure, some amount of that investments will definitely go to Thailand. And I know now Cambodia is expanding. So I think it will affect very well for Southeast Asia market, to be honest. I expect that because we see a lot of Europeans coming more and more, especially Polish market is expanding for Thailand, for Phuket. So we expect Germans, European coming like more and more, because recently Fazwas shared the analytics with us. 10% of all sales are to Germans, whereas in my company, 10% of all sales are to Polish. That's a big amount.
Yeah, great. So may I have your opinion, Mr. Ranjith, that from on your perspective?
Yeah. The general understanding is that when there's a war or conflict, investors flee away. A market may collapse completely, or market may establish somewhere else, say get shifted to a safe haven. It may take the actions immediately, or it may take some time to get established. Say, for example, in the region, say Cambodia and Vietnam, both are post-conflict countries. It took quite long time, several decades, for their real estate market to pick up after the end of the wars in those countries. So those are the examples from nearby countries. But see, in my own country, Sri Lanka, there was a 30-year-old civil war. And during the war itself, the market established in what we call safe havens. See, the conflict areas in the north and east, the market completely collapsed and property became worthless. But it shifted to other major cities where people considered as safer.
Yes, thank you. Very nice. And how about Mr. Edmund? How do you feel about it?
Yeah, I think in this era and the war and geopolitical uncertainty, a lot of the economy and the market have actually reshaped to kind of innovation and also transparency in a data-driven era. So how this thing actually shifted, probably investor will be more looking into the country that is more stable. It's more stable and the politically more convinced for the investor to come into the investment portfolio.
Yes, thank you. Yes, of course. And then I see the trend that from Europe, East Europe, and then the Ukraine, moving more to Southeast Asia, and then the Middle East will be coming soon. But then, when we categorize the market, real estate market is many segment or category. So like high end or the vacation home or the like the condominium in Bangkok. So which one do you think that it will tend to be benefit from this conflict that is about geopolitical conflict over Asia? So do you think that the foreigner will tend to buy which market more? So how about Mike? What do you think?
I think that people who have money now are thinking to move themselves somewhere, because a lot of people were living in Middle East, and mostly all of them, how we call it here, phalanx, as I am, so they will have to move somewhere else because they don't want to live in a war. Either they can go back home and just observe and see what's going on, or try to find another destination. And to be honest, Thailand is very good. It can be cheap, it can be expensive. You can choose. It depends what you have. It can be whatever you would like to have, you can find it here. So recently we saw a lot of people from Middle East coming, but now they're not in a rush. They're observing, as you said. So they are waiting. And now they're telling us like, okay, if it's gonna continue, we definitely need to buy something ready to launch, because they have to move. Otherwise, if we can go back to Middle East, we will simply take like off plan and wait. But in terms of numbers, honestly speaking, Phuket with that appreciation rate what we have there, it doesn't sound very attractive for investors.
And Mr. Ranjith, so which market do you think that?
I think rental market get a lot of attraction, as well as investment property. These are probably the two areas that ordinary people will select to invest. Then in my own country, we have seen that at the end of the civil war, lot of coastal properties got opened up, and as a result, investment in hotels and resorts boomed for a period. But the tourism is a very volatile market. As when something happens, the market can collapse completely. For example, due to the conflict in the Middle East, these days tourism is very low in my country. A lot of bookings have got cancelled. On the other hand, see, as my friend here, see, a lot of investment from Russia and Ukraine on coastal properties, especially in the southern coast. See, Germans, Ukrainians, and Russians are investing in hospitality industry, although they cannot legally buy land or buildings. So they get a local person to say invest on their behalf and say with joint ventures, they are investing in say hospitality industry, expecting that it is booming, because say for several years in a row, our country was promoted as one of the best places to visit. So taking advantage of this, a lot of foreign investment on hospitality industry. That is what I have seen in my own country, say these three areas.
Thank you. Thank you. Mr. Edmund, so how's your opinion about the which market that for investment that they because from geopolitical uncertainty that the client want to invest?
Personally, I think probably those property purchase appreciation property may not kind of in demand to last long. Personally, I think that the recurring income for investment will be a better choice, as in for rental. And moving forward more towards digitalization, I believe that tokenization of the real estate for the investor may be a bigger trend right now. Yeah, because in moving forward for transformation, in years to come, we want to digitalize and also want to set the digital asset for real estate. So that may attract more investor, because that will liquidate the fund fast, whereby any problem you just liquidate it and then you will just run and escape from the country.
So you mean that any market that can be invest by any other form, that would be good. So the investor that they interest on it, and then it's easier to cash out sometime, right? Okay.
Exactly.
Yeah. So now we call that over the world is we call it global instability, which is happen all over the world. So not only in Ukraine, in Middle East, and then in somewhere in the we hope not to, but it's sometimes the war is unexpected in the future. We just only forecast. So of course, the investor have their strategy to invest, right? And we have seen they change their strategy how to invest. So, Mike, what do you think that about the strategy that the or character or behavior that the investor they might change during this period?
I think people will invest more in equity, whether in real property and like bonds of big companies, and maybe they will just simply sit on cash. That's it, and observe. Big money not in a rush. They can just wait. So I think like in terms of whether people will invest, I had already pointed up what I'm thinking, to be honest. What actually my investors told me, and currently like my company operating in another Asian countries, like Azerbaijan, Tashkent, Azerbaijan, Uzbekistan, and their market is a bit different from Thailand because the population is growing fast and there is like a real appreciation rate in terms of investment. So investors get like 15-20% real appreciation rate numbers because the population is rising and cheap money is coming there. Recently, BlackRock announced that they're getting in the Uzbekistan investing like $500 million US. But for Uzbekistan, it's like enormous amount of money. So probably it's like smart investors was just looking different markets. That's it.
Yes, Mr. Ranjith. So
I think the local investors have different set of strategies compared to foreign investors. Foreign investors, in my opinion, are rather footloose. They may shift their investment at the very moment that they find certain uncertainties around. Say they may invest in the stock market. They may invest in say condominium property, say that kind of things. But our experience is that say they shift immediately when say they find certain uncertainties. Whereas the local investors, they are smaller in scale, but they invest more seriously as an investment properties and stocks, and they won't say easily sell their stocks with the price fluctuations, because say they are playing the game more cautiously. They are, and say the Middle East was discussed here. Say we have a lot of our people working in the Middle East. They usually invest in condominium property. Say either as a say alternative place in the city when they come back, or as rental property, or Airbnb kind of things, because it's an additional income. In the Middle East, they can get say credit at very low interest rate. Taking advantage of that, they buy land, they buy condominium, and that becomes their say security for the future. So their strategies are very different from the international or the foreign investors.
thank you. Mr. Edmund.
Yeah, probably I look at it differently. Investors are looking into two routes. One is the where they will maybe shift from a residential investment to commercial or industry invest for recurring income. The other route will be more towards the REITs investment, right? Or they may put in funds into REITs and get it returns on the investment part of it.
Thank you. Real estate, sometimes we call it as a safe asset. We call it the most safe asset in every kind. But sometimes that they have a geopolitical problem. Sometimes it's not the safe asset, because sometimes in certain area. In Europe or anywhere like Middle East. So sometimes it's changed over. So you think what role that the investor, how to adjust the name of the role of the real estate, that you can change it, because a lot of things happen, the global instability about geopolitical. So what role, and then how to change it? And start with the Kun Mai. So because you feel that you're from Kiev?
I personally faced it, you know.
Yeah.
I personally faced it, because before the war started, I recently launched a building of 16 apartments in Ukraine, in Odessa. So I invested like almost $1 million over there, and I had the deal to sell it out. After 4 days, the war had started, but my buyer texted me like, "No, I will not buy it. So can you give me my deposit back?" And of course, I gave him money back. It was like back in 2022. So is it a safe asset? I would say yes, it is, but you definitely have to wait, because currently I still, in my personal case, I still own that apartment. I rent it out. Of course, I get like 250% less than expected, but still on my investment, it gives me like 7% ROI. That's not that bad in the wartime, so I expect it to raise. So personally, what I can think about how investors should react now and how they have to diversify, just pick different locations, pick different things, and that's it. Invest in don't put all eggs in one basket. That's it. That's why in the time of uncertainty, either just be with cash or invest in different baskets. I would do that. Actually did that.
And I have more question about because you're from Ukraine.
Okay.
I would like to know a little bit more. The real estate price in the condominium that you own is still the same, or what the difference?
The price I would say is still the same, but you won't be able to sell it fast. For instance, I own a lot of property in Odessa. Odessa is on the Black Sea in Ukraine. And for when the war started, I didn't drop any price, but for almost 4.5 years, I sold only like 2 basements, what I owned, because it's like cheap price. I didn't sell anything else. I didn't sell like a plot of lands. I didn't sell business centers, nothing. So because the people are not willing to pay that amount because the risks are too high. A missile can come and that's it. So their investment would be zero. That's an issue. There are some parts of Ukraine where war is not affected that much, and construction is going and selling very well there. So it depends.
Thank you. Great. And Mr. Ranjith, yeah.
The general belief is that the property is a safer asset, but not necessarily. It can be illusional. Generally, property values appreciate. So people take it as a safer option compared to others. However, I can recall 2 incidents that I was referring to the civil war. There was a ceasefire. There was a period of ceasefire. Then especially diaspora was investing in conflict areas, and because they saw that it's an opportunity to make quick money, because there was a lot of demand for housing, rental housing, etc. And diaspora was confident that the peace will prevail, and therefore they can invest. Then suddenly the agreement collapsed and war started, and the property became worthless. Yeah. Then finally in 2009, the war ended. Slowly, diaspora has come back and invested in property and housing and businesses, etc. And as a result, the prices have skyrocketed, and the ordinary people can't cope up with, because they can't match the ability of the diaspora. Because diaspora earn in US dollars, Canadian dollars, Australian dollars, pounds, etc., which cannot be matched by the ordinary people who say. So as a result, those who remain find it very difficult to build a house, own a house, and it's a market dominated by diaspora. So you see the impact and consequences are felt in different ways among different parties.
Thank you. Mr. Edmund, so you are from Singapore. I believe that the last over 10 years, we call Singapore as a safe haven for investment. And then because many of foreigners invest in Singapore, and then the prices skyrocket over the past 10 years. So compared to Dubai, because you are similar geopolitics, similar character. So what do you think that what you play for the role for Singapore to attract the people and call it the safe asset in the world?
I think in Singapore, probably the safe haven is no longer a kind of title for it. As because our government have introduced the ABSD, the additional tax for the foreign purchase, 60% tax for foreign purchase. So that will defray the investor of coming in to go to other country which is with a lower purchase cost, right? For instance, like Thailand, Vietnam, and many other Indo-China properties. For instance, like if you purchase Singapore now without 1.5 to $2 million, you can't buy any residential property for investment. So if you were to take this $1.5 billion to park into other place, country, which costs probably 300 to 500,000, you can get a property, and then you can multiply it with 3 units. Your rental yield or returns will be much higher. I mean, speak from my own heart. Yeah, that's probably at this moment the government is still not going to lift up the ABSD tax yet. Maybe in future, I'm not too sure.
Thank you. So now we talk about the project or the people who want to develop the project. That now we call it we call it a little bit of market disruption. Disruption about there's so many things, but we talk about the global war that will happen in certain area. So for example, what is the recommend? Because you are from you're in Phuket, right? Or Phuket. So what's your recommend to the developer to do to prepare for the future? Because the war or in the area, it will happen for a long time. It still exists. So what do you think, Mike?
I think that developers have to create not a project, because there are so many of them right now on the market. I think they have to create the value of the project. They have to answer themselves why the investor should give them money, what pain or what execution it will give to the person who will invest in this particular project. So you have to think more widely and more smarter, because the competition is rising big. The biggest Thai developers coming in, so the market is squeezing. And still in Phuket we have like thousands of rai of a land. I would say like dozens, not even thousands, like a lot. So you have to think more wisely and do something what market doesn't have, like, because like even today Dr. Sapon told us the development is only 3% of GDP, and tourism was overall 10% of GDP. And I would not say that Thailand is developing tourism that much. So it's kind of creating an ecosystem together with like landmark destinations, museums, F&B projects, like a whole ecosystem where the person can stay and feel the value for themselves. That's actually what I'm trying to do by my own, to be honest.
Thank you. Mr. Ranjith, what is the future trend that developer can prepare for this situation?
I would like to take that question differently, not the developer or the government or the authority, because market fluctuations are normal. And when there's a conflict or war, the fluctuations are even very severe. And in situations like that, it is the buyer who affects most. There was time in my country, my city, that condominiums were mushrooming because there was a huge demand from people who were fleeing from conflict areas. And it was really booming, and very shoddy construction, bad planning, bad design, and all kind of undesirable things were happening. Then government intervened by introducing a condominium regulatory authority. It was necessary to regulate. There was no precedent for that before. Before that authority came, the Housing Act, etc., was the legislation available. But this condominium property development was something new that happened due to the conflict in the country. I think so. That has produced good results. Government has intervened at the right time, but it is only regulating the planning aspects, design aspects, construction aspects, management aspects of the property, but still not adequate enough to protect the or safeguard the buyer. The buyers are still victims when market fluctuations happen. And sometimes a developer abandon the construction, then what to do? I know in Thailand there are certain legal protection to the buyers. Our market is not developed to that extent to protect the buyers. So I think the government should do more to look after the interests of the buyers.
Thank you. So what should they from maybe in Singapore? What is the developer want to have to improve to prepare for the future market that from the movement, maybe from foreigner?
Okay. In terms of Singapore perspective, I think they have actually do a resilient planning for their business, and also the digital transformation for the developer. Why I say so? Because if they have digitalized or transformed their real-time data with whatever they have collected from the purchase of the transaction, they can do some predictive kind of forecast, whereby they prepare them for the future aspect of the property sales. Yeah, that is the trend right now. What I see. Also speaking on my company, we are doing digitalization for developer and real estate agency who want to actually embrace with technology to fasten or to speed up their process of the sales and also transaction. Yeah.
Oh, it's good. I mean, in Singapore, they are trying to develop the digital transformation.
Yeah, because
forecast.
We have the real estate transformation roadmap 2025 this year, which is last year, but I think we have actually crossed to 2030 because we are kind of stakeholders are not agreeable with some transformation at this point in time, because the stakeholder will be like government body, which is they have to actually embrace to actually join the digital roadmap, whereby everything will be digitalized when the transaction is being performed, including the purchase, the e-signature, and also the kind of e-conveyancing if they were to be kicked in.
Thank you. So maybe this is the last question that my personal question, because I feel that everybody in the industry. So Mike, what do you feel about? Do you think from let's say from 2 years ago and then up until now, so how many foreigners that want to buy or invest because of a geopolitical problem? in your feeling, what percentage increase or decrease?
I would say that is kind of a tough question, to be honest. In
Okay.
terms of the feeling, I don't know how to answer it properly.
It's your feeling.
I think people just buy because, like, personally, me, I don't sell real estate, so my team does it. So what I hear from them, mostly people who buy in Phuket, it's mostly vacation houses and emotional buyers. They're not looking on the numbers at all. So I don't think that it's because of geopolitical risk or something like that. They won't have to, because from Russia, let's say, they have a straight flights on a daily basis from almost each city. So they come there like from vacation house, and like a relationship between Thailand and Russia like more than 100 years ago started. With like previous king and the king of Russia before the president. So Europeans now, like I would say that Phuket is like booming. It's like trend. Now it's like we call it bestination, not a destination, like bestination from best. So right now we just closed a real, not emotional, like financial deal. We sold like 20 apartments to one investor, and he was talking purely about the ROI, and he has never been to Phuket, but he is a real billionaire guy, Polish one. This one, but he's just diversifying, and he bought with us in Dubai as well, a lot of units. So the guy is simply looking on the numbers. One of a kind for us.
Thank you. Mr. Ranjith, what do you feel about that?
Well, usually countries like ours were more relying on FDI kind of investments, big investments. They were not paying much attention to smaller ones, individuals. But now I think they are getting more attention, and governments are also not very cautious as they used to be, and allowing small investors to come and buy shares and buy condominium properties, boutique hotels, etc. This is why we see different nationalities come and invest in properties, which was not the case about 10-15 years ago. There are pros and cons of it. As I said earlier, their investments can affect the ordinary people. They can't afford to buy a house in their lifetime with their ordinary salaries when the market prices are displaced by the foreigners. So it is not like FDI is coming and investing in infrastructure or industrial property, etc. So this is something of a concern for countries where the lower middle class is quite big in proportion, because they may never realize their dream of owning a home, because of foreign investment in land and small properties. So I think the government should be cautious about this, and and there is already a bad feeling among our local people that the coast is now almost owned by the foreigners. Coast is not anybody's property; it is public property. But there is something called private beaches. Beach cannot be private. Beach is a public good. But this kind of bad feelings are seeping in because of the uncontrolled nature of foreign investment coming into villages, coast, little areas, little towns, and I think government should be cautious about it, because government's first priority is to look after the well-being of the of the local people? This is my take on that question. But honestly, I can't say what percentage. No, I don't have that data to say quantify it. But it's kind of a feeling.
So how about in Singapore? So after, do you have any movement from Dubai to Singapore? That any person though after the geopolitical?
Not exactly. I think instead of throwing one sum of money to invest in a property, now in Singapore they have actually do a co-living sharing or co-own the property, whereby in fact you own one property, you can own multiple property to reduce the risk of getting hurt on your returns.
Okay. Thank you for today. Thank you, Mike. Thank you, Mr. Ranjith, and then thank you to share your experience and comment on the war. And hope that we'll invite you again next time. Thank you. Thank you.
Thank you very much for this insightful panel discussion. Please stay on the stage first. At this time, I would like to invite Ms. Momo Ang, Chairwoman of MRESA, to present the token of recognition to our speakers and moderator.